Average rates for 30-year and 15-year fixed mortgages fell to 3.83% and 3.05% respectively. That's the lowest since long-term mortgages began in the 1950s. For those looking to refinance their home, Freddie Mac has released the results of his first quarter refinance analysis showing homeowners who refinance continue to strengthen their pocketbook. Mark Boyer is the CEO of Foundation Financial Group. His company specializes in mortgage lending. And Mark is here to talk about refinancing. Good morning, and thank you for joining us.
Good morning. Thanks for having me.
So is that good news? It sounds like good news, right?
It is good news. It's good news across the board. Refinancing trends, like Freddie Mac's report said, they're increasing people's pocketbooks because they're saving them money. Rates are at all-time historic lows, so right now is a fantastic time to refinance.
Most people know about refinancing. If you own a home, you've heard the term, maybe even you've gone through it. What's the difference between refinancing and loan modification?
A loan modification is traditionally with the lender that you're currently with. So if someone holds your mortgage and maybe you're having some problems with it, they're going to look at a modification of the current terms. A refinance is essentially starting over with presumably a different lender.
Now, which one do you recommend?
It really depends on the situation. Modifications are traditionally available for people that are struggling, maybe have missed some payments or have had some things change in their life. Refinances are generally for people that are current and looking for a change of term or a change in their interest rate.
Now, if you're upside down, okay, if you're underwater with your home, do you recommend financing? Can you refinance?
There are some programs available out there, and that's going to depend on who currently holds your loan. So Fannie Mae and Freddie Mac both do have some programs if you are underwater. So there are possibilities. They're not for everyone right now, but there are some opportunities there. With
the new regulations now out, I mean, there's a lot of whole new regulations in the last couple of years we've seen. Is it easier now to get a loan? Harder?
It's much more difficult.
Yeah.
Credit requirements have really strengthened. They've gotten a lot tighter. It is harder because of all the new regulations. Right now, we're in a fairly good place. It's just a matter that we don't go further with regulations.
Is that a good thing, do you think, or is it squeezing a lot of people who can afford homes, just can't do it?
Right. A lot of the regulations are very good. They've tightened up the industry. The credit requirements are very good. But there are some people that are being squeezed out right now because of it.
Now, what is this? You're talking about this trend where people are trying to shorten the terms of their loans. What is that?
Right now, we're seeing what I feel is a lot of consumer confidence because people are taking their mortgages and converting them into shorter-term mortgages, traditionally a 15-year mortgage versus a 30-year mortgage. So although their payments might be going up slightly, what they're feeling is if they can cut that term down and have some long-term planning, they're going to be in a better situation. So that really exhibits a lot of consumer confidence because they're feeling more stable about their jobs, their employment, where they're going to be going. So they're trying to set up.
And finally, I know you wanted to touch on education and getting people, especially young people, maybe people who are getting ready to enter the workforce and thinking about buying a home. Are parents and the educational system doing a good enough job getting them prepared for buying a home and taking on a mortgage?
We're not. Okay? Parents are not, the school systems are not, the industry really isn't. It's something that's often not talked about, not just home ownership, but overall credit and what it means to your future. And those things need to be introduced at home and in the school systems because, unfortunately, a lot of the parents aren't as well versed as what they should be. So we need to be starting sooner.
Okay, Mark, thank you so much.
Thank you very much.
Appreciate your good information. Mark Boyer is the CEO of Foundation Financial Group, a growing and innovative financial service provider right here in Jacksonville. The Foundation Group specializes, again, in mortgage lending. The link to their website is on your screen. It's ffg.com.